G'day home buyers, Alex here again, your home buying mentor from Funded Finance. Today, let's unpack a phrase you'll see time and time again on loan approval, subject to valuation. Now don't worry, it's simpler than it sounds. When a lender gives you a pre-approval, they're essentially saying, yes, based on your finances, we are willing to lend you X amount. But that pre-approval usually comes with conditions, and subject to valuation is almost universally always one of them. So what does subject to valuation actually mean? It means the bank needs to confirm the property that you're interested in buying is actually worth what you're planning to pay for it and exists. After all, the property itself is the security for the entire loan and one of the most important things. So a couple of things can happen. Option one is they'll send out a qualified valuer to assess the home independently, taking into account things like its condition, size, location, and recent sales in the area. Another option is they will assess the contract, see that it represents fair market value, and just go, sweet, we're good, move on. That's probably one of the more common ones. And thirdly though, they might do what's called a desktop or curbside assessment, just to get a valuer to take a second look, glance at it, confirm, again, it represents a fair market value. So what happens from there? Once you find a property and your offer is accepted, the bank will order this valuation. Ideally, the valuation comes back matching or exceeding your agreed purchase price. If it does, awesome, move on. The conditions met and your pre-approval moves that second step closer to a full unconditional formal approval. But what if the valuation comes back lower than your agreed price, right? So this is known as a valuation shortfall. It means the bank is only willing to lend you a percentage of the assessed value, not necessarily your agreed purchase price. And for example, if you agree to pay, say, 700 grand, but that bank's valuation comes in at 650, they may only lend you 80% of the valuation amount, being 650, not the full 700. So this shortfall would then need to be covered through a larger deposit. In some cases, it may even mean that we need to renegotiate with the seller because the valuation is not representing what it's actually worth. But most importantly, what I generally want to do is explore other bank options to ensure that the value isn't having just a terrible day. And that particular valuation doesn't represent a giant outlier compared to what other valuers are saying. So the key takeaway is that the subject to valuation is a standard part of the process, designed to protect both the bank and ultimately you by ensuring the property is a sound and quality investment for many years to come. Understanding these conditions is crucial for a smooth home buying journey. If you navigate pre-approvals or are looking for your next steps, reach out to me and my team at Funded Finance. We are here to help you confidently understand every single step of the journey. See you next time.